You have seen the headlines. London property prices are stalling, taxes are rising, and even the London Stock Exchange is shrinking. But while the UK market hits pause, Dubai is breaking record, and UK investors are leading the charge. Here's what's really happening and what it could mean for your portfolio. I'm Bear Mitchell, with over 2 decades of real estate investment experience, helping clients in Toronto, Miami, Panama, and now here in Dubai. I've seen market cycles come and go, and this shift is different. It's not just UK investors making the leap. We're seeing a global movement of capital. And in this video, I'm separating the hype from reality, break down the facts behind the headlines, compare the numbers, and highlight the legal and regulatory differences that matter most for you as UK investor. No hype, just hard data and practical insights. Let's dive in. Let's start looking at the facts behind those headlines. If you're a UK investor, you've likely noticed the shift. London property prices have barely moved in the past year, with some prime areas still down over 20% from the 2014 peaks. Taxes and transactional costs keep climbing, and London Stock Exchange saw 88 companies delist or move their primary listing elsewhere in 2014, the highest number since 2009. Now compare that to Dubai. Property prices here surged over 19% in the last year, and in some villa communities, prices are up by more than 38% since 2014. Rental yields in prime Dubai neighborhoods routinely hit 6 to 8%, and in some cases even 10%. While the citywide average ranges from 5.5 to 7.6, many London properties, by contrast, struggle to reach 3%. And the market is booming. Over 226,000 real estate transactions were recorded in Dubai last year, a 36% jump in volume. For context, London saw about 69,400 property sales in the same period. According to Deloitte's 2025 report, Dubai real estate market is now outperforming nearly every other global city. For UK investors, these aren't just numbers, they're signals. Signals that old rules of property investing are changing, and that opportunities may be shifting east. So let's look at what's really fueling the exodus from London property. The data paints a clear picture. First, tax and policy changes. According to the Financial Times, the UK 2025 non-dom reforms will tax global income after just 4 years of residency, impacting thousands of international investors who previously enjoyed exemption. Stamp duty has also been steadily rising. HMRC data shows that on £300,000 investment property, the typical surcharge now exceeds £17,000. Second, market stagnation. The latest Savills report shows that prime central London prices remain 20.7% below their 2014 peak, and transaction volumes in 2024 are still down by nearly 30% compared to pre-pandemic years. Rental yields in many London neighborhoods have dropped to as low as 2.5%, while inflation and compliance costs continue to climb. And third, sentiment and confidence. Odgers and Bernson's 2025 analysis highlights that 88 companies delisted from the London Stock Exchange last year, the highest number since 2009. This isn't just about property, it's a signal that even major corporations are losing faith in the London market. For UK investors, these aren't just headlines, they're signals that old formulas are no longer delivering. That's why so many are now looking for alternatives with stronger fundamentals and more growth potential. Now let's look at what's fueling Dubai's rise as global property investment hotspot, especially for the UK investors. Let's start with fundamentals. According to Deloitte's 2025 report, Dubai's population grew by 5% last year, reaching 3.8 million, and the city welcomed 18.7 million overnight visitors, a new record. This surging demand is driving both rental and capital values. The real estate market is setting benchmarks. Knight Frank reports Dubai led the world for luxury property prices growth in 2024, with prime prices up 15.9% last year alone. The average residential transaction value reached around £650,000, a 19% jump from 2023. And my favorite, rental yields are another standout. Deloitte and Savills shows Dubai's citywide rental average is 6.7%, with new build apartments in popular areas often exceed 8%. In contrast, London's average yield is closer to 3%. The market momentum is clear. Dubai recorded 180,900 real estate transactions in 2024, a 36% increase on the previous year, with total transaction value that exceeded £130 billion. For UK investors, Dubai offers freehold ownership, robust legal protection under RERA, and transparent transaction data published by Dubai Land Department. Mortgage options are available to non-residents. and the process is increasingly streamlined and digital. Beyond numbers, Dubai's Golden Visa program offers long-term residency for property investors with no personal income tax and the ability to sponsor family members. The city's world-class infrastructure, international schools, and year-round sunshine are attracting not just investors but families and entrepreneurs from around the globe. In short, Dubai combines growth, yield, lifestyle, and accessibility, making it one of the most compelling alternatives for UK investors seeking diversification and long-term value. UK investors are now among the largest group of foreigner buyers in Dubai, with demand surging in 2024. According to Dubai Land Department, the city recorded 226,000 real estate transactions last year, a record high, a 36% increase of the previous year. Transparency is a major advantage. All transaction data is published online, allowing buyers to verify prices, ownership, and developer track record, something not always possible in other global markets. Regulation is robust. RERA requires developers to place buyers' fund in escrow, and strict penalties for project delays have sharply reduced off-plan risk. Financing is acceptable. HSBC, Emirates NBD, and other major banks offer UK investors mortgages with rates from 4.5% and up to 70% loan-to-value on completed properties. For buy-to-let investors, Dubai rental market is landlord-friendly. There are no rent caps, and eviction process for non-payment is typically completed in 30 days, according to civils. For UK investors, these are structural advantages that makes Dubai a uniquely attractive and secure market for global capital. Now let's talk tax, because for UK investors, this is where Dubai truly stands apart. In Dubai, there is no personal income tax, no capital gain tax, and no annual property tax on residential real estate. Rental income and capital appreciation aren't taxed locally, a major advantage over the UK and most of the European markets. For UK residents though, global income and gains must still be declared to HMRC. With UK's 2025 non-dom reforms, even Dubai rental profits may be taxed in the UK after 4 years of residency. The good news, Dubai's transparent record and clear ownership structure makes UK tax compliance straightforward. We work with leading UK tax advisors to ensure every client is fully compliant and optimally structured. In short, Dubai offers low tax environment, but UK investors must plan ahead to make the most of these advantages. Dubai's property market is breaking records, but smart investing always comes down to clarity, compliance, and timing. If you want to go beyond headlines and get direct answers on investment strategy, tax, or legal structures, join our weekly webinar for UK investors. We'll walk you through real case studies, share exclusive market data, and address your questions in real time. Register by clicking the link below. I look forward to your success.